Come on in, sit back and relax. You're listening to another episode of the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. Our topic for this month is advisor experience. And we chose this because we feel advisor experience is one of the most important criteria for a successful software product. We work with a lot of fintech firms, a lot of software providers in the wealth management industry, and advisor experience is very important to them, as it is to their clients. A large portion of our clients are wealth management firms, enterprise wealth managers, who also see advisor experience as critical to their success. So if you are running a fintech or an enterprise wealth management firm, custodian, asset manager, or TAMP, and need some advice and guidance on technology strategy, advisor experience, or operational improvements, you should run, not walk, to our website, EzraGroupLLC.com, and fill out the Contact Us form on the homepage. Our experienced team can help with RFPs, software implementations, evaluations of your current platform, and more. You can take advantage of our free consultation offer by going to EzraGroupLLC.com. Now, today's guest is Sean Brown, CEO of YCharts. He's been CEO since 2016, and he oversaw some rapid growth at the firm, as well as their acquisition in October 2020 by PE firm LLR Partners. Now, LLR has a broad fintech portfolio that also includes Archer, which provides middle to back office solutions to the asset management industry. I can see some synergies there between the two companies. Now, before YCharts, Sean was president of a startup called 7ticks. That's seven, the number seven, TICKS, like a ticker tape, which provided outsourced managed trading infrastructure for buy-side and sell-side banks, hedge funds, and prop trading desks. Another interesting business there. Sean was a guest on our podcast, Wealth Tech Today, way back on episode 74, which was October 2020, I believe. So you can check that out if you want to hear other things that Sean can talk about. Now, before we get started with this interview, a couple of quick housekeeping notes. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. Make sure to check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And now, let's kick this thing off. I'm happy to introduce our next guest on the program. It is Sean Brown, CEO of YCharts. Sean, hey, welcome.
Craig, thanks for having me. Good to be on your show.
I'm always happy when I can get some time on your busy calendar to get to talk to you a bit about the market, the industry, YCharts, what's going on, trends, and just general happenings. How are things in Chicago?
Great. We're, Chicago, this is the 3 or 4 month period of time where Chicago is the best city in the world. So really, really enjoying it. It's the other 7-8 months that aren't quite so great. So glad to be on in the happy times.
Isn't it more like 3 or 4 weeks? of nice weather? It's you got winter until like June, and then you get a couple of weeks of summer. Then
it's longer than that, but it's far short of 6 perfect months.
I love going to Chicago. I can't wait to go back. So can you let's jump right in. Can you give us the 30-second elevator pitch for YCharts?
Sure. We're 12 years old, and we are almost exclusively focused on enabling wealth advisors and also asset managers. And the value prop that we try to support them on are 2 things. Number one is we help them develop insights on markets, securities, portfolios, et cetera. In addition to that, we help them communicate. So we think it's really, really important, not only that you have an insight, but that you can effectively communicate that to your investment committee, to your social media following, to your prospective customers, or to your current customers. So 2 things, insights and communications.
So why did you add the communications? Because you were really heavy on the insights when you first started out. What made you add the communications part?
A couple of things. One is that we think the job's only partially complete if you can help people with robust analytics on what's going on in the markets or characteristics of a security or portfolio. We think ultimately, we have almost 10,000 customers. The vast majority are wealth advisors. And as we talked to them, we realized a bigger challenge than knowing the markets and knowing the characteristics of portfolios was effectively communicating that. And we came to that realization just by talking to them every day, but we also did a study a couple of years back of advised individuals, not advisors, but the advisor's customers. And those customers said, my wealth advisor is awful at communications. I don't hear from them enough. When I do hear from them, it's with generic and not specific and timely content. And the most powerful thing we heard from them is, I forgive my advisor of these sins while we are in the midst of an 11.5-year bull market. But I have a suspicion bad times may be somewhere around the corner in markets. And if my advisor is not communicating better, they're going to lose my business. And so it was at that point in time, Craig, and guess what? The markets did turn. They turned early this year, late last year.
That's right.
That's how we came upon it. And we just said we were going to be doubling and tripling down on helping them communicate better.
That's awesome. And we talk about content being too generic. We hear that a lot as well, that they really want personalization. Everything's coming down to personalization. Hyper personalization is the buzzword. Yep. So getting more specific and actionable, and also not just actionable, but related to what that particular client needs at that particular time in their life.
Yep, absolutely. If you also need to know, you need to know not only what is the prospective customer or current client interested in, you need to know how they want to be communicated with, what the cadence is, and what channels they want to be communicated with. So we think we are able to help advisors, because honestly, some customers who are at the well into their retirement period and are in fixed income securities, they don't want to hear from their wealth advisor. And if they do hear from their wealth advisor, they want to see them in person and they want to sit down once or twice a year. Some of the newer generation, they want the weekly market updates delivered by email. They want to see the Twitter posts. They're going to follow the podcasts, and they'd like to do a Zoom call once a quarter. And so, knowing who you're trying to talk to, how they want to be communicated with, how often and what channels, that's the stuff we enjoy helping advisors with.
So this month, we are interviewing industry leaders, fintech companies, all around client experience. And that's very important to you guys as well with your software. Can you talk a bit about some of the ways that YCharts help advisors to be more efficient and more effective in their job?
Yeah, a couple things I'd say. First of all, you got to make your user interface, whatever you're trying to help a customer with, you have to make it super simple. For us, the average age of wealth advisors is, Craig, right in your strike zone and my strike zone age-wise, it's 51 to 55 years old. I don't want to indict you and I as a demographic, but we may not be the most tech savvy. We need an easy to use experience. So one of the big areas of our focus is to make an easy to use interface. So if you can use a Google search bar, you can use our application, forward, back, predictive search kind of stuff. So thing number one is make an easy user interface. Big thing to do once you've got that figured out is, if you really, really know your target user persona, you should know what they're trying to do with your application, and you should predict that, and you should make it super easy. So we have a mantra inside YCharts that we try to make the complex easy, and we try to make the easy quick. And we make the easy quick. We have some features called quick flows, where we think, based on a couple of things we saw you do with some keystrokes or mouse movement, what you really want to do right now is compare two mutual funds and some key characteristics. We're not going to make you go through finding the right tab. we think we know what you're doing. We've got a quick flow menu that's up on the right-hand side of your screen, and it says, are you looking to compare two securities? Click here, and then just enter the name of those securities, and we do it for you. So that's the type of thing. Another thing, Craig, just a quick example, and slightly less of a SaaS experience is we know advisors hate creating quarterly economic analyses. They tell us, you know what, we're not macroeconomists, and they labor at the dining room table or in their home office on a Sunday with a glass of bourbon to write up all the astounding things they know about the macroeconomy. We've said, we talk to you every day. How about if we create a template for you? Every quarter, we create a quarterly economic analysis. It's got your logo on it. It's got a write-up. You can edit it as you see fit. Instead of putting 6 to 8 hours into it, you can put 20 minutes into it and send it to your customers. So I'll stop there by saying we just think if you know your customer well enough, you're going to create features and functions that'll exactly do what they are hoping to achieve.
That's a big if you know your customers well enough, right?
Yeah.
And a lot of firms don't. They don't spend the time to understand what they need, what they're doing, how they're using the software, how they're interacting with the software. We talk about target user personas, because we help firms figure out what those are. And sometimes they're not what they expect, and the people and users are interacting with their software in very different ways. So with the client experience really wrapped around that, how did you design your UI UX to be easier to use? Besides of course, making the complex easy, making it easy quick, are there any other ways you analyzed your UI UX to be easier to use?
Yeah, we make it a regular practice to have focus groups and to sit down with our customers, a lot of times on their premises, not as often on their premises since COVID, but we're sitting down with them and understanding what they did 20 minutes before they got to YCharts and what they did 20 minutes after YCharts. And we have found in sitting down with enough advisors that within the advisor community, there are various different user personas. When you break up that group of individuals, you know, you've got the pure marketers who are all about like the Josh Browns and the Michael Batnicks and the Ritholtz team who are about branding with the goal of good branding will bring customers your way. You have, you know, the client-facing advisors who are actually sitting down and doing new business development efforts, who are part marketer, but part let me analyze your portfolio. You have very analytically minded sales executives who are kind of going out and saying, hey, I'm taking more of a quantitative approach with my clients. You have people who sit in back offices and come up with portfolios and are very research and quant heavy. They may be in the home office. They may be saying, hey, here's the approved portfolios. What we have tried to do is define those personas and then make sure we have a flow in our application that supports how they work. And 100% of the cases, it starts with a dashboard, which helps them understand what's going on in the market today and configure it to what they think is important. And then from there, the journey proceeds in different directions, depending on if you're the sales minded or marketing minded, in which case you may be going to a chart or a comparable table. Or if you're more quantitative deep dive researcher, you may be going to build a portfolio in YCharts, or you may be doing deep dive research on a security and going to one of our deep dive tools. So we've just tried to understand the personas and paint a logical path, an easy path to get to the flow that they're working on today.
And that's what it all is about, is really getting into their flow and making their flow quicker, less clicks, less thought process, so they can focus on other stuff like, you know, generating revenue, bringing in new clients.
I'd like to take a break from this episode to talk about our sponsor, the Invest in Others Foundation. The Invest in Others Foundation is running the Invest in Others Awards, which is a program that recognizes the charitable work of financial advisors in communities across the country and around the world. Awards are presented at their signature event, the annual Invest in Others Awards Gala. Over 600 advisors and financial services executives attend this premier event to celebrate those individuals that actively give back to their communities. I've gone to, I think, the last 3 award galas. They had to cancel it for COVID, and then they canceled it again last year, 2021. It was normally in September, October timeframe, but hopefully we'll have it again this year. So there are 5 categories of awards that recognize the distinct ways that advisors have made a difference through their work with a nonprofit. So the nominations deadline is April 1st. That's less than a month. Just go to investinothers.org and you can click on the nominate, click here to nominate link and nominate an advisor. If they win in one of the 5 categories, which are Catalyst Award, Community Service Award, Volunteer of the Year Award, Lifetime Achievement Award, and Emerging Impact Award, they can win, let's say, finalists in all categories receive $25,000 for their charity. The winners in the Catalyst, Community Service, Next Gen, and Volunteer of the Year categories receive $50,000. The advisor who receives the Lifetime Achievement Award receives $75,000. That's a lot of money for a charity, can really help. I've been lucky enough to be on the nominating committee, the awards committee, the judging committee for a bunch of these different awards. It's really hard. These advisors do some great work, both local communities in the US, in South America, in Central America, in Africa, in Asia, across the world, and right here at home. All kinds of great stories, great charities that help people of all ages, shapes, and sizes. You should nominate someone and also donate. Your company will probably match your donation, which provides twice the benefit. Please go to investinothers.org. Thanks.
So when we talk about integrations, that's a big issue at Ezra Group. We spend a lot of time working with fintechs and working with our wealth management clients on integrating the different solutions. We're coming up with an integration score, which actually should be out by the time this podcast is released. That rates every application on the Keatsis Ezra Advisor Tech map for how well they integrate. So how do applications integrate with YCharts, and what have you done to make it more seamless?
Yeah, that's such an important point, because if each and every one of the vendors in that complex Keatsis map viewed themselves as an island, you've got a bunch of swivel chairing to do as a user to get your work done, and that's inefficient in and of itself. So I'll tell you what we do. First of all, the biggest point of integration we have is data. We believe that the only way you can develop insights and do effective communication is if you've underlying this is some really robust data. So, we've got 500,000 economic indicators, which we source from government sites, et cetera, everything from COVID statistics to retail gas prices to housing starts to GDPs of Sweden. Almost 30,000 equities, almost 80,000 mutual funds and ETFs. So we ingest a lot of really great data. That's a big integration. Once the data's in, now you're saying, the advisor is saying, I want to analyze my client's portfolio today. You don't need 5 systems, a portfolio accounting system and a CRM and your research and analysis tool to independently have a view of Mr. and Mrs. Jones's portfolio. So the big point of integration we spend a lot of time on, Craig, is how can we make sure whatever your single source of truth is for your client's portfolio, whether that's an Orion or a Tamarack or an InvestNet or whatever your platform is, or maybe you've got all your client portfolio things in your CRM or another tool. We make it easy to ingest that portfolio, do the work to analyze that portfolio, potentially making some tweaks, and then push it back. So big thing number 2 after data is integrating around portfolios. And then item number 3 is with regards to communications. We make it super easy if you want to get a tweet out today, or you want to post something on LinkedIn, or you just want to put something into a PowerPoint presentation that you're giving, we try to make it very easy for you to push visually appealing content created in our application off to whatever channel you're trying to push it to. So those are the big ones for us.
I like the ability to push the content out there, because that's really what it's all about. If you can create the content, but it's not easy to get out into social media, into a statement, into a packet, into an email, into whatever way you are communicating with the client, it's practically worthless. This isn't really matter.
Yep.
So with all that data coming into your system, and 10,000 customers interacting with it in all the different ways they can through your application, what type of trends are you seeing in advisor activity? How are they using the product, and what's been changing over time?
Yeah, great question. We used to see a lot of set it and forget it type of behavior with advisors towards their clients' portfolio. It was heavy use of research for, on an episodic basis. And then, periodically you'd come revisit a client portfolio or make some tweaks within our application. We have seen an absolute explosion in the use of our software on a daily basis. And we've seen that it really started in March of 2020 when the pandemic hit. We saw, our average site visits in a month explode beyond a million visits per month. We saw our, one of the SaaS ratios that is often used as daily average use to monthly average use. We saw our statistics rise from, a 30%, which is very respectable, to north of 50%, which means people are using it daily to support their businesses. We see every day, multiple times a day use of our dashboard, which means people want to know what's going on in the market. We've seen over the past 6 months, we've seen probably even our customer base has grown probably by 25% in the last 6 months, but the use of charting has more than doubled. We believe in discussions we've had with advisors, that is because they're getting being both proactive and saying, hey, Mr. and Mrs. Jones, here's some tweaks I want to make, and here's a picture to support that, or reactive because Mr. and Mrs. Jones are saying, is now a time to buy the ARC Innovation Fund or Tesla or the FANG stocks. So we have seen way more than a doubling in the use of our application during turbulent market downturns and kind of recessionary times.
That's impressive. Yeah, especially the daily active use versus monthly active use.
Yeah.
That's an explosion. I mean, it's just people just heads down using your software all day.
And thank God for a truly kick butt CTO and engineering team, and also the wonderful services of platforms like Amazon Web Services, that you really see some spikes happen. When you are beholden to and serving capital markets, and it's been wonderful that these times have helped us understand truly our scalability as both a platform and as individual applications, and it's been great.
Any other stats you can share? That the average site visits over 1 million, user base grew 25%. Anything else you can share around statistics or advisor behavior?
We're seeing well over 100% growth in the volume of portfolios that are being entered and tweaked in our platform, which is about normally we would see over a 6-month period of time, we'd probably see the proportionate to the user growth. So we'd normally see a 25% growth. We've seen 100% growth there. Well, what does that tell you? People are spending a whole lot more time trying to make sure their clients are paired up with the right portfolio. They're ingesting a whole lot more portfolios from the systems I mentioned, the Redtails or the Orions or the other places that were the Schwabs and other places were integrated, and saying, I can't be in set it and forget it mode. That's not the right thing for my customer, and I'm proactive about that, or my customer's not going to let me be that passive. I need to be demonstrating my value to them. So those have been the major ones. Another one is we do custom email alerts and reports, which says, hey, Craig's wealth advisor knows Craig's interested in staying abreast of 5 or 10 statistics every day or every week or every month, and to receive an email. We have seen the growth in the use of that tool, again, more than quadruple what we would otherwise see. And what that's saying to us is advisors know they must communicate more frequently, and they're doing more work to automate the communication that they can have with their markets, and using our application for that. And so, we're spending more and more time helping them more precisely deliver the type of email to the specific customers that they want. And so those are the big tools we're seeing the most on. We're also seeing a whole lot more interest in some of our macroeconomic statistics. If on a normal monthly basis, we'd see 200,000 hits of unemployment rates, or the CPI consumer price index, we're seeing quintuple or more volume there. So everybody's kind of interested in what's going on at the macro level now.
Well, things are getting complicated. All of a sudden, people are realizing it's not so easy to figure out what's going to happen.
Yeah,
and with all these different events going on in the world at the same time.
Yeah, and it's interesting, the discussions we have with advisors. I think there's 2 ways an advisor can look at this. Like, wow, I'm having to do a whole lot of work now that I didn't have to do before, which is, oh shucks, I don't get to play quite as much golf. We're actually seeing advisors saying, this is awesome. This is where I'm able to clearly every day demonstrate my value to my clients. And they're saying, I'm loving the engagement. Yeah, it might have maybe I'm working a few more hours a week, and my vacation this summer was postponed because it's a tough time. But they're saying, now my clients understand why I charge them 0.75% or 1% of AUM per year. They're saying they're clear. I'm earning my fees big time now, and they know I was there during the quiet times. They especially know I'm there during the noisy times.
Yeah, earning your keep. That's important. But you also, it's not just earning it, but letting them know what you're doing to earn it. Because you're working, but the clients may not know or may not appreciate all the work you're doing.
Oh, in my marriage, Craig, I get no credit for cleaning the garage if my wife doesn't know anything about it. I get a lot of credit when my wife's away, and I say I cleaned the garage, I fixed a few shingles, and I washed the car. I get a whole lot more credit for being a terrific husband than, which I'm probably not, but I get a whole lot more credit then than I do when I just leave my good work quiet.
Indeed. So thanks for the stats. It's super helpful. Really nice to see some insights into a successful business and a product that's being used by so many advisory firms out there. Can you share a bit about your upcoming product roadmap? What can existing clients and prospective clients expect to see from YCharts in the next 6 to 12 months?
Yeah, well, we've got charting in our name. And so we believe it's incumbent on us to be the best at visualization. So, we're rolling out some really great features around things like scatter plots and around canned and customized reports. You're going to see a lot of that. And those are reports that, you don't have to start from scratch from these reports, quick configured reports. Another big thing is we are rolling out ESG data, environmental social governance, so that you can look at your portfolios not just on fundamental or other characteristics. You can look at it on ESG and say, I'd like to know I'd like my portfolio to contain no companies that have exposure to China or to tobacco, or that have board configurations that meet my desired needs. So ESG is another big one. Another real big one is sharing of dashboards. We know that sometimes you've got a power user in your office that really has it right on what they're paying attention to on a daily basis. And we wanted to make it real easy for Craig to share with Sean the dashboard and what I'm monitoring, and to be able to not only have my own dashboard, but to quickly tab over and see what Craig's dashboard saying, because that was a really well-structured dashboard. And then beyond that, integrations. We think until our customers tell us you are integrated in all the key areas I need you to be, we've got work to do. And so we have some things on the horizon with, the InvestNets of the world, continued integrations with the Orions, the Red Tails, the Edipars of the world, to just make a very seamless workflow.
You're speaking our language. We love integrations here at Ezra Group. I know you guys got a really good score in our integration survey. So it's only going to get better as you add more integrations. And when you're talking about the dashboard sharing, is there any thoughts of being able to share sample, like the best practices from among your clients across the base without giving away any names? Would you say, like, hey, 55% of advisors are using the dashboard in this configuration or are using these widgets? Maybe you should look at that.
That's a really great point you're bringing up, Craig, and it supports a broader theme, which is with almost 10,000 customers, we are able to share with advisors in an anonymous way now, what might you be missing out on, or what are others doing with our tool? We publish monthly, what are the top funds that we're screened for? What are the top equities? What are the top economic indicators people are looking at? So we tell them that. The exact point you're hitting on, which is what are others dashboarding? We not only are working on providing that at the just kind of the macro level, we're looking to say, Craig, you may have a devoted group of followers that you want to share your dashboard with, or they want to subscribe to your dashboard. We're looking to make that capability possible sometime in 2023. That's the nice thing about having enough of a presence in the space, though, that being a wealth advisor is not a zero-sum game. There's plenty of unadvised people, so you're not really competing with that next advisor. So there is room for more collaboration. We want to help them. Do that.
That's excellent. Yeah, I love the peer comparisons, the peer sharing. Show me what other advisors are looking at.
Mm-hmm.
The top screen securities, top indicators, all that's super helpful. That makes your system more sticky because they can't get that elsewhere, and it saves them time. They don't have to go searching through all the indicators, searching through all the reports, which I'm sure you have many, and to find out which ones I like. Well, here's what everyone else is like, and let me just try those first.
Yeah,
I save a lot of time.
Yeah, I go to Amazon. Amazon makes it real easy for me. Netflix makes it real easy for me to see what people like me are doing. We want to do that for advisors. They're all smart. They're coming from different directions, but sometimes it's nice to get recommendations. The great thing about being a software company is we know who's using our software, when they're using it, and how they're using it. And sometimes you can find a clone type of person who's doing things very, very similarly, or a cloned cohort. And you can quickly say, hey, if you don't mind, we've noticed some of your patterns look like this. Would you be interested in some recommendations? All privacy concerns addressed. Right. And maybe we can help you understand how you could be doing things a little bit better or differently.
Excellent. That's analytics, real time, providing feedback to the clients in real time, and how you build loyal customer base.
Yep, that's what we think. We've got an average. Our average customer stays with us over 7 years now, which means we're doing some things right by them, and we continue to challenge ourselves to say, how can we continue to do right by them. Well, we need to continue every day to re-earn their business, and let's do that through more and more innovation. Craig, we did a survey, and it told us that we're saving our clients almost a half of a day per week of time. And that thrilled us because we didn't even bother to ask them too much about how much better investment returns. They told us you're saving us a half a day of time. And I've kind of challenged my team to say, how can we get that to 3/4 of a day of time and make this, the ROI on our software is just crazy good. And a lot of times my team says that means you should raise the price. I say, no, we're appropriately priced. Let's just let financial experts in ROI see what a great ROI YCharts is.
Half a day per week. If it's 52 weeks in a year, based on my calculations, that's 26 days they're saving. 26, man-person days that they're saving in a year.
Yes, and it ends up correlating. If you look at the price of our software, it ends up correlating to the fact that if you're on a monthly subscription, it pays for itself in the first 4 days of the month. Well over a 600% ROI. So that's not real hard to explain to people who know ROIs. And I love when I overhear our team giving that discussion, saying, "Hey, come back to me when you're a customer if you didn't prove that out. Happy to give you a refund," and haven't seen any.
Yeah, so everyone is listening. If you're thinking about getting YCharts or need a better client experience in your fundamental investment research and client communication, get it now before they raise the price, before they realize how crazy things are. 4 days pays for yourself the first 4 days. That can't last very long. So for prospective clients, where can they go to find out more information about YCharts?
Just come to YCharts, the letter Y, wordcharts.com. Sign up for a free trial, no pressure. Come try our software. If you want to engage with a human who can walk you through it, great. And see if it works for you.
Awesome. Sean, thanks so much for being on the program, man. I really appreciate it.
Yeah, I appreciate having me, Craig. Thank you.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Number 1, YCharts has been around for 12 years and has almost 10,000 clients. Both impressive figures. Really can't call YCharts a startup anymore. They're an established vendor in the space, and we have them in the investment analytics and research category in the Keatsis Ezra Group Advisor Tech map. Number 2, YCharts sees data as one of the biggest points of integration. They bring in over 500,000 economic indicators, 30,000 equities, 80,000 mutual funds and ETFs, and 10,000 separately managed accounts, which we forgot to talk about, but I'm wanting to throw that in there. They also have that. So a lot of data they are bringing in and analyzing. Number 3, advisors have shifted from set it and forget it portfolios to heavy research usage post-pandemic, and especially post-recent market downturn. YCharts has seen 100% growth in portfolios entered by advisors, which is 4x what they expected, since they've seen a 25% growth in the user base, but 100% growth in portfolios entered. So advisors are really building a lot more portfolios, taking advantage of the YCharts tools. So you reached the end of this episode. Thanks for listening. Please go to our website, EzraGroupLLC.com, scroll to the bottom of the homepage, and subscribe to our newsletter. Once a month, you'll receive an email chock full of wealth management goodies, including news, links, analysis, updates, all kinds of good stuff. You will not be disappointed. Thanks for listening, and I'll talk to you all again next time.